Good morning, Tim Dyson, here to give you the trading update for January 2011 in advance of our annual general meeting for our shareholders. It's been a very good start to the year, I'm pleased to report. We started with the very good news of the acquisition of Blue Shirt, which is our first real foray into investor relations in the US. This is a tech-focused investor relations business with headquarters in San Francisco and offices in New York. They really do round out our offering for tech companies. They really enable us to take any company from cradle to grave, hopefully not to grave, but certainly from cradle through to IPO. The rest of the performances of the business have been really quite exceptional. North America has been particularly strong. We've seen double-digit growth across our North American business. We've seen similar levels of growth actually coming out of our Asia business, not quite as impressive, but pretty close. Slightly less impressive was the UK, really down into low single-digit levels. And we're still seeing lingering challenges in mainland Europe. I think that part of our business will take some time for it to turn around, which is pretty well as we predicted at the back end of last year when we were last looking at this. But all in all, I think you're seeing a very strong recovery from the business. The analysts have us down to produce 20% revenue growth and I think 20% profit growth for the year, which at one level looks pretty ambitious. Thankfully, we're very much on track to deliver that, and we certainly don't see ourselves at this stage at least being overly challenged by that, which really shows how much the business has recovered. A lot of that recovery has come off the back of the transition to digital. Digital really is driving a lot of new business opportunity within the organization and driving a lot of additional budget from existing customers. And that's a very exciting transition for us. You know, we're suddenly seeing marketing departments open their purse strings to the kinds of services that we've been developing, which bodes well for us from a growth perspective over the next few years. I do have one piece of news really to end with, which is the departure of Will Whitehorn as our chairman. He's been with us for 7 years. It's been 7 good years for the business. The business has more than doubled during his tenure. We've undertaken a string of acquisitions whilst he's been on board, and I'd certainly like to thank him for his involvement. But as a business, we've been at a point where we're really looking to our longer-term future and trying to figure out what the next step should be. And it made sense on both sides to really look at making some changes at that level. He decided it was a good time for him to move on. He has lots of other new exciting things ahead of him. And from our perspective, it was a chance to really bring in some new blood as we really do push forward on this digital transition. So I wish him well and thank him for all his efforts. And I look forward to reporting back on what looks like a very good year for the group.